So we think there will be a few multi-trillion dollar assets in this space without a doubt over the next 5 to 10 years. I think we look back at we look back unashamedly leaning upon that sort of internet experience to think about the development of the tech here, and we think we're at that sort of interesting crossroads of that sort of dial-up to broadband type leap that the tech needs to make. So putting market movements to one side, and we can cover that in a minute, but we think the technology's kind of proven itself in that sort of sandbox of sort of tech users that are willing to spend the time, willing to watch a YouTube video to work out how to use an app. And we think it's proven itself that it can add utility in that sort of framework, and it can recreate a whole lot of services and can create a whole lot of new ones and create that sort of disruptive tech. But we're at that point where it needs to sort of make that jump, just like the internet did back in sort of the late 90s, early 2000s, to reach that sort of mass market. The people that just want to use a product because it's got more utility rather than, it's a blockchain or it's this or that. They just want to be able to point and click and have one app that's better than the one they've been using to do something for 5 years. And so we think that tech is an exciting sort of inflection point where it sort of scales now from the hundreds of thousands of millions of users to the hundreds of millions of users to billions of users, where it needs to now start wrapping that sort of that much better user interface, much faster, much more sort of point and click type usability, and use that sort of infrastructure and the capacity that we've been building for the last few years to really sort of scale to that next sort of step. Now that's a hard leap to take, and that takes time and that takes a lot of experience, but that's kind of the hard yards I think the entrepreneurs and the engineers in the space have been doing over the last sort of 2 or 3 years, building that skill set to then launch at the same time as we've been building multiple blockchains to provide the capacity we need to offer these sorts of services and capability.
And I'm trying to think through the kind of future of the blockchain space. We probably don't know all the top 5 incumbents in several years' time, in 5-10 years' time, but do you think it's going to be the typical distribution where one blockchain has 80% and it scales down, or something like that? I mean, what's your working hypothesis in your head of what it looks like? Because it's unlikely, because we've seen all technology, it tends to accrue to a few, whoever that is.
Yeah. So we think there will be a few multi-trillion dollar assets in this space without a doubt over the next 5 to 10 years. We've always had a view that we've always been focused largely around proof of stake, because we always thought that would be the future. Not that we think Bitcoin will ever change from being proof of work. We just couldn't see a world where we had multiple multi-trillion dollar blockchains all relying upon proof of work type consensus and the resources that requires. So we've been an early adopter and we've run infrastructure on proof of stake chains. We used to run a Dash Masternode and others. It's way back when in 2017. So we've always thought there'd be multiple blockchains, and that those blockchains would effectively form a specialization. And that specialization, because there's not infinite block space on a blockchain, that specialization would effectively crowd out other users. But those users wouldn't disappear. They'd find another blockchain to effectively take their business or their application to and adopt that blockchain. So our map has always been there'd be a landscape with multiple $1 trillion plus blockchain type infrastructure, and those blockchains would have some form of specialization that suited the application that was running on. And look, even Bitcoin's an example of that, right? So as a store of value, as a chain, as an asset that you effectively want to be able to keep in a vault or however you store your private keys, you don't want that asset longer term to change, right? Like, you don't want to have to take your seed phrase out of the vault and be faced with a technology that's completely different than when you put it in the vault, or has undergone a whole lot of forks across that journey and taken a whole lot of potential new attack vectors into that asset, right? So in a way, Bitcoin's success as a store of value, as that sort of that highly liquid sort of macro stack asset, also means that it doesn't change and it can't progress aggressively, because the holders don't actually want that to happen. People want Bitcoin to stay as it is. They don't want it to take the risks that Ethereum's taken. But that's kind of opened open the window for Ethereum to sort of dive out and take that risk and take multiple upgrades and take that sort of risk because it needed to do that to sort of keep itself relevant. That's the culture of Ethereum, and that's it sort of filled that void about how can we change this to allow all these certain different things to be built, and it's always been in Ethereum's interest to take that risk. Now, Ethereum's then been super successful at DeFi, which was a thing we identified would be that sort of first use case that crypto would really sort of prove out, just like sort of media was for the internet. But that means, as we've seen through multiple periods, that Ethereum can get super expensive, right? And people, smaller investors or smaller users get crowded out. And it becomes the domain of people like us that are just moving, big volumes and are overly fussed by a fee that's gone from 40 cents to $5 when you're moving a $10 million asset. So, but those users don't go away. They go and find another chain that's got higher throughput, lower fees or whatever it is that suits their business model. And we've seen that play out particularly over 2021, 2022, that chains sort of form an ecosystem that has some form of specialization that suits their capabilities, be it low fees, high transaction processing, robustness, security, whatever it may be. And that, when they're successful, that crowds out other potential use cases and they sort of follow that path. And it shouldn't, just like Bitcoin became that store of value type asset, it shouldn't be seen as a failure. That's the ultimate success, right? That's the sort of the healthy use of that chain, and that gives it relevance and that sort of gives it a pathway forward, but it does leave opportunities for others to come up and fill that sort of gap in the market. And that's how we've set up portfolio up to sort of follow those increments as people sort of find new use cases.
So let's just go through some of the layer ones, and we'll talk a bit about layer twos, and we'll talk about the applications layers as well. So layer one, state of layer ones right now, what interests you outside of, obviously Bitcoin and ETH?
Yeah, I think we've been long-term holders of Solana and Cosmos Atom. So we think that in that view of that multi-chain view of the world that we have, the assets you want to own are assets that bring something different to the table. So, whilst we think there's a future for multiple EVM chains out there, we've deliberately chosen Ethereum, Solana, Cosmos Atom and that ecosystem as those three representations of those different attributes that people will be looking for over time. And all three of those chains are very different in terms of, their tech and in terms of the use cases that they're best suited for. And so we think that's a good representation for us to sort of express that view of a multi-chain world where apps look for those sort of different attributes to build upon.
Yeah, and I've been interested in Solana for a while now. And just one thing, it just seems if there's one narrative that they seem to own, it's that consumer blockchain.
Yeah, and
they've kind of gone after that.
Yeah, they have, and that sort of like super fast processing speed and the ability to do things at super low transaction costs, right? Which is kind of the counterpoint to I mentioned earlier about the fees on Ethereum moving much higher, which again, is a success for Ethereum in terms of driving revenue and returns and those sorts of things, but it leaves that sort of opportunity for a Solana, which is a completely different piece of tech, where you can effectively move or transact in an NFT that might only be worth $1, right? Like it makes no sense to do that on Ethereum, but it makes a bunch of sense to do that on Solana. And so that's the market opportunity for them to sort of fit that void.
Did you manage to buy more when it sold off to what? I don't know what it got to, $8 or something. It's crazy.
Yeah, we did top up. So we've actually been long Solana. We've been long Solana since mid 2020. So we've actually got an entry price of 22 cents. So probably one of probably the best trade we've ever done, or the best buy we've ever done. We bought about 1% of Solana at 22 cents back in mid 2020, and we've held a lot of that through. We've sold some along the way as we'd have to, or we'd basically be a Solana ETF. But we've sold a bunch of that. We've sold a bunch of that through the journey, but we've still got some of those original 22-cent tokens that we bought way back then. We did actually, for the first time, buy a little bit more sub $10. We missed that sort of $7.50, but we got a little bit pulled back in single digits. It was just the perfect crypto example of how extreme the noise can be. And it's in both directions, right? Unashamedly in both directions. At the top, it's as crazy as it is at the bottom. But that sort of point late last year was just kind of insane.
Hey visionaries, thank you for tuning in. For more free crypto content like this, head over to realvision.com/crypto. You'll get early access to the most brilliant minds in the space to cut through the noise, get in-depth analysis, and get you ahead of the curve with unbiased insights.